Hello everybody. Dealing with some technical difficulties here. So hopefully you guys can hear me. If you can, please put something in the chat saying you can hear me. Good morning, people. Welcome. Today, I want to do a quick, and when I say quick, I mean an hour-long talk on some stocks. For those of you who know about stocks already, this could be a refresher, or this could be just some information that you already know. I want to cover the basics. Before I get started, I want to lay out some ground rules. Please, everybody on here is family in some form or fashion. Whether I worked with you before, we're actually blood family, anything like that. I need y'all to take care of each other. So please don't be soliciting your information. If people want to link up, this has nothing to do with me, all right? I'm not putting it out there for anybody to link up to talk about stocks. And please, if anybody asks you for money or to send you their account information or to cash out them some money so they can help you with stocks, please don't do it, all right? I'm not a financial advisor. I'm not even claiming to be an expert in the stock market. I just feel like that going back before the crash happened, when the pandemic started, I didn't have anybody on my timeline, whether it was Instagram, Facebook, Snapchat, any of that stuff that was talking about stocks. So I felt like there was a lot of people who just now got into stocks because of everything that went on with Wall Street bets, GameStop, AMC, and stocks like that. So I wanted to provide an opportunity to give you guys some basic knowledge, kind of pick your brains and see what kind of questions you have about the stock market, give you some basics, because the stock market can be overwhelming, but and you can have some good days and some bad days, but I love it. I'm actually obsessed with it. I wake up in the morning, the market starts, pre-market starts at 4 o'clock in the morning and ends at 9:29. The actual market starts at 9. So I usually wake up at 4, and I might go back to sleep before 9:30. But about 9, I'm back up again. I'm watching the stock market. Stock market officially ends at 4, and then I believe after market ends around 8 o'clock. So I'm constantly still looking at my phone or online looking at what the stocks are doing, because things can run up or things can go down. But just want to give y'all an opportunity to ask some questions. I want to go over a few things that I watch, look at, things that are important to me within the stock market. So if you do have any questions, please chime in the chat. If you want to get on live, just send me a request and I will connect you. You can ask whatever questions you have. Without any further ado, let's go ahead and get started. One thing to know, that people might not have known, that the stock market actually started in 1792. I'm not going to do a real history lesson. I just want y'all to know that the stock market been around a lot longer than any of us. So things that go on in the stock market have been established years ago. The stock market itself, though 100% of the traders have influence, 75%, or roughly around 75% of the traders within the stock market are the industry, hedge funds, banks, stuff like that. Out of the 25% of those are retail investors, and out of those retail investors, 75 to 85% of those are millionaires or greater. So when you look at the stock market, I need you to realize that those people have a large influence in the stock market. But as you've seen with Wall Street Bets, if we pull our money together, we can make things happen as well. Our money together can equal up to what they have as far as the rest of the retail investors, hedge funds and stuff like that. I mean, you're talking about billions of dollars. I don't think we want to invest our billions of dollars and are willing to lose our billions of dollars. But just wanted to give you that little tidbit. 1792, stock market started. So I didn't realize that before this class. All right, so some things to know. What is the stock market? Stock market is just another part of your portfolio. It's another way to invest in the market. You have your Roth IRAs, you have assets, like you'll have your property assets, stuff like that. Things that will appreciate, not depreciate. The stock market is just something else, 401k, stuff like that. But it's just another way to invest. Why should you invest in the stock market? The reason why you should invest in the stock market, if you look at, for those of you who are in the military or was in the military, y'all know y'all have your thrift savings plans. If you go through any mutual funds or stuff like that, what they use that money for, they use that money to leverage the stock market and to make more money, of course. So that's how you see returns. So the reason why I invest in the stock market is because I want to see my own returns. I want to control my own future. I want to see my money grow and my money make money for me. The old ways of doing things was, you put money in a CD and you let it mature over the next year, 2 years, 3 years. You might put $1,000 in there, and over that time you might get $50. Or let's put our money in a savings account and just let it sit there for years. And with the current interest rates, over 20 years of putting $150 in the bank in your savings account, you'll end up with like $30-some thousand, $35,000, because the interest rates aren't really high. So despite the stock market being risky, there is ample of opportunity out there to make money. And I will show you some of those things. Again, I am not a financial advisor. I am not an expert. But I'm just trying to show you a different way of pulling your money together, letting your money make money for you. Because we're not on this earth for a long period of time. And while we're here, we don't need to be struggling while we're here. Okay, we need to get to the point where we're all living comfortable. So I just want to give you a few tools in order to help you with that. Now, I'm gonna pull up a chart real quick. This is not my chart. This is TradingView. TradingView, for a lot of people who do their own trades in the industry, is a great asset to utilize when it comes to monitoring the stock market, for tracking trends within the stock market. It can go really in depth. I don't use it for that, but you might, and so I want to provide you that information so you can take a look at it. Everybody's still there? Everybody can still hear me? My chat's quiet, so let me go ahead and take this off. Here we go. All right. I hope everybody can see this. All right, so this is TradingView, right? You're looking at Tesla. Anytime you look on YouTube, there's plenty of YouTube videos out there, and I'll provide you guys some of the YouTubers that I watch, so you can see the information they're talking about. They provide a lot of great information, but the thing that you should always know is, regardless of what they put out, and a lot of them have big followings, so if you see them put something out, sometimes that's what causes the stock to run up. always do your due diligence. They can recommend 10 different stocks to you. You need to actually do the research to see if those 10 stocks work for you, because the stocks themselves, in order to invest in a stock, you feel like it has potential to go up. We're not talking about stock options, so we're not talking about the potential of going down. We're talking about going up. You want to have some type of connection with that stock. And with that stock, like with Tesla, there's an investor sentiment to it. Like, you feel like you have a role in there. You can text or send a tweet to Elon Musk, and he'll respond like, hey, I feel like the Model 3 or the Model Y, when it comes out, needs to be a hatchback instead of a regular trunk. That's a great idea. We should look at that. Or the Cybertruck, you got that back panel back there. Maybe you should make that in the solar panels. We should look into that. So that right there, having someone that influential and ability to reach out and touch them and actually speak to them, adds to the popularity of that stock. All right, so I see a question on here. Great, because this is for you guys. I want to know what y'all want. I want to answer the questions that y'all have, and if I can't, that's good, because it allows me to learn something new as well. All right, so where do you recommend to research individual stocks? All right, so for me, I have MarketWatch. MarketWatch is a great site. You can pull up any stock you want to. Since we were looking at Tesla, let's go ahead and keep with Tesla. All right. Now, if you look at this, there's a lot of information on here. But some of the key information you want to know, of course, is what it's opened at, its 52-week range. But one of the biggest things to learn and pay attention to is the market cap. And why I say that's important, because stocks are based off of, they move up and down tremendously or barely, like a slow pace. Like a rabbit, they'll take off, or like a turtle, and they'll just gradually go slowly. And a lot of that has to do with their market cap. So for Tesla, with their market cap being almost, $783 billion, almost close to $1 trillion, it's going to take a lot of money for that stock to move. Unlike a penny stock, which might have a 10 million market cap or 100 million market cap, it's a lot easier for that stock to move, because you get an influx of 1 million people trading, and that volume moving. A stock can go from $20 to $40 and double like that, or you see a 3x or a 2x, 3x, or 4x in some cases, depending on what's going on. But for Tesla, you're not going to see 10x. You're going to see it gradually move up over time. But when you look at this, it provides you all the information you need. When the company started, who's in charge, who's on the board of directors, any information you look at, like, are they making money? Their earnings call, their last earnings call, how they do, how much money is going to employees, all that type of stuff. You can look at their financials, you can look at their charts. For me, this is the best one to do research on to start. And hopefully you end up using that. And there's plenty of other stuff out there. When I first started out, I used stock, I believe it was Stock Tweets. I have to look and see exactly what it was. I still have it on my phone. As far as mobile use, I utilize StockWit still. And then also I'll get into the different types of trading applications, or at least the ones that I use. And Webull, just to let you know real quick, and it's Webull. That's one of the stock apps I use. That app right there has a lot of information on it. That's one of the reasons why I love it, because it's so easy to track and it provides you so much information within the stock. But this is a good one. Another one that is great as well is Finviz. and hopefully I spell it right. Finviz is a good one as well. So if you go into Finviz and you start going within the screener itself, you can start tracking. Like if you want to find the next penny stock that's going to take off, this is a good way to go in here. And you can filter your searches through what you're looking at, whether it's what market it's on, the market cap. Like I said, here's the different designations for it. So a mega market cap is 20 billion or 200 billion or more. So those, like these stocks right here, don't move just because a couple people like it, or say some news came out for Apple. Apple's one of them. Apple's a $1 trillion market cap. News came out for their earnings that just happened a couple days ago or last week, and their stock actually went down. Part of that was because of the whole Wall Street bets thing going on, but the thing is they had the greatest earnings in their history of Apple, and the stock moves a couple dollars. It might go up $5 or $10 a share. Now, if that was the news that happened for a micro stock or a penny stock, that might have went from $20 a share to $70 a share. And so that's how you see people make a lot of money in the stock market in a short amount of time. So let's see here. Tracy, I hope that answered your question. Those are just two that I use when you want to start trending or tracking trends for stocks themselves. TradingView is probably going to be one of the best ones. It does cost to do it. I did buy it through my iPad, through the app on my iPad, and that was a one-time fee. And it allows me to use it on my computer as well. I just have to sign in with my Apple ID. And this is a great way of tracking like trends. So like if I wanted to do a trend line for Tesla based off of how it's been doing, I could do a trend line. And I can clean that up a little bit. And depending on how you do it, once you start doing some research, you'll start learning how to track things, but you want to see that, hey, my stock is on an uptrend. And you can look at the view based on what's better for you. So there's three types of traders. You have day traders who are in and out of the market all day, every day. Like they're moving stocks here and there. Like they might trade different stocks 5, 10, 20 times a day because they're just moving to the next one that's moving up to make more money. You have swing traders who might do a little bit of day trading, but they're in stocks, short term. So they might hold onto a stock like, hey, I know there's some news coming up on a possible merger. So I'm going to buy this stock, wait for it to go up, and once it goes up, I'm going to get out of it and move on to something else. And then you have your long-term investors, and those are the people who are like, hey, I'm going to put my money in Tesla, and I'm going to let it go ahead and just do what it do, and I'm not going to look at the market every day. They might take a quick glance at it, but that's it. Like, I'm just investing for the future. So you got to figure out what type of trader you want to be. And the trader you want to be, I would say for swing traders and day traders, it's a full-time job. You're constantly looking at the stock market. You're trying to learn the trends. You're trying to see what's going on. And now we just added a new element to it, Wall Street bets, trying to track what they're looking at to see what they're going to pump up and go down, because that could affect you. Not because, you could be holding a stock that you think is popular. Excuse me. So for me, like I was holding Sundial Growers, which is a cannabis stock, weeks before it ran up. And it was just waiting for it to do something. And then they caught a hold of it, and then they started pumping it and it started going up. And then next you know, Robinhood and some other sites stopped it from trading altogether. So I was affected by that. Not because I was following Wall Street bets, but because it was a stock that I had that became popular to them. And so they ran with it. Let's see. Please ask questions. I'm here for you guys. So we talked about the different types of investors. So you need to learn some lingo when it comes to the stock market. And it took me a while to learn this. My sister tried to get me on Forex, and as soon as I started watching the videos, I was confused. They were talking about animals, and I didn't know what the animals were and why they used animals for it. But they talk about being bullish, they talk about being bearish, bull, bear, or being a sheep. So a bull in the market, I mean, you just think about somebody who's charging in. You think that stock is going to take off, so you're bullish. You feel like it's on an uptrend. Bearish, you're just chilling. You're like Winnie the Pooh, and you're like, I'm just gonna go about my day. Things are gonna go how they go. You're thinking the stock market's gonna go down, so you're in chill mode, right? So you're bearish. And then sheep are just people who are too scared to get in the market. They just sit back and watch. They don't participate in the market. So depending on how the stock is going, you're either bullish, bearish, or you're a sheep. So for me, when it came to Tesla, I was a sheep. I didn't get into Tesla. Even though I knew Tesla was going to be on an uptrend, I kept waiting for that dip to happen for me to get in, and then it started running up. Shout out to my sis. All right, so Dante's asking for me to explain the difference between stocks and options. So I'm not going to get too much into options because I want that to be another video later on or another stream. But the difference between stocks and options are the same. They're stocks. But what it is it gives you the opportunity to make money on the downtrend as well. So with the option, what you're doing is you're buying contracts, you know. So and all contracts are 100 shares. So say you want to buy, we'll stick with Tesla. We'll say you want to buy a option for Tesla. First, you determine what do you think Tesla's going to do. Do you think Tesla's on an uptrend, or you think Tesla's on a downtrend? If you think Tesla is on an uptrend, you will buy a call option. And I know some of this is going to confuse some of you guys because I know you're still in the basic phase, but let me answer this question. So you're going to buy a call option. And when you buy that call option allows you to buy one contract is 100 shares. So what you're telling the lender is, I want these 100 shares. You're not necessarily buying 100 shares at the time. You're just buying the contract to buy those 100 shares at a later date if you want to. So you'll buy, say, one contract, and you expect it to go up. Right now it's at 100. We'll use this term right here. We're at $116, right? Or $816. You feel like within the next few weeks, a month, a year, that Tesla will reach $900 a share. So you'll buy a call option based off of what the current market is right now and where you expect it to go to and what time frame you expect it to go to. Call options give you dates. So you could pick it a week out, 2 weeks out, a month out, 3 months out, 6 months out, a year out, 2 years out for that option. So with that option, all you're saying is at $816 a share, I want to have the potential to purchase 100 shares at this rate. So if this stock goes to $900 a share, you have the option to either sell those contracts as they are at 816 and make money that way, or you have the option to actually buy, and what they call is exercising those options, those contracts. Buy those contracts at 800, or those shares at 816. So you would buy 100 shares at $816 when the market is already at 900. So you'll have the potential to have those shares at that price and make further money from it if you exercise it, or you have potential to sell those 100 shares at that price. Just real quick, we'll get back to the basics. Exercising an option isn't always the way to go. Most of the time, you're just going to sell that contract or those contracts, depending on how many you buy. It's much easier, it's quicker, and it's people get in real quick to buy options. Let me go ahead and just sell these contracts real quick. But when you're talking about a whole bunch of money over a long period of time, in some cases you want to exercise that. Now with Tesla, say you have 816 shares, and we'll bring this up real quick. Where's my calculator? Here we go. All right, so you're talking about $816 a share. Unless you have $81,600 to exercise that option and buy those shares, you're more than likely just going to sell the contract. You're not going to buy those shares outright. Now, if you have that much money, think about how much more money you just made with it going to $900 a share when you actually buy that and then sell it later or hold on to it. So Dante, I hope that answered your question when it comes to options, the difference between stocks and options. And anybody, just to let y'all know, if y'all got my messenger, y'all on Facebook with me, please send me a message. We can Zoom call or whatever and try to go over some of this information to kind of help you guys out. All right, so where was I at when we were talking about basic stocks? We talked about the 3 types of traders. We talked about a market, whether you're bullish, no problem. We talked about whether you're bullish, bearish, or you're a sheep in the market. Like I was saying, for Tesla, I was basically a sheep. I knew it was going to go up, but I just never put my money into it. And when I was bullish on Tesla was, where was Tesla at? I want to say I was bullish on Tesla back in around March, and it took a dip. And so I waited for that dip, hoping that it would dip more, and it didn't. And then it started its uptrend. And as you can see, and this is a little different because what Tesla did a split. So Tesla took 1 share of their stock and turned it into 5 shares. So multiply at this price, we're looking at $80 a share times 5. So at the time it was $400 a share with Tesla, and I believe it got down to 300 and something at the time. And so I thought it might have go lower, but it didn't. So at the time it was going up and continuing going up to the point where I believe it got to $1,200 or $1,300 a share. So if I'd have got in at $400 a share and rode it till it got to $1,300 a share, you see how much money I would have made over that time period, depending on how many shares I bought. And then they did the split, and the split happened, and I believe the split turned it into about somewhere around $425 a share. It went up to $500 a share. It dropped back down to like $300 something a share, which I should have bought in then. And then it rode that wave all the way up to where it's at right now, to 816. It actually went a little higher than that. I believe it made it up to 882 and then came back down. So all right, what other questions do we have? This is for you. All right, so again, the best for me, the best way of tracking stocks would be Market Watch. Finviz is great when you want to narrow down what stocks you want to look at, especially for day traders. This is a great app for that. Also, just the regular apps on your phone. If you have an Apple phone, the Apple Stock app is actually a pretty good app. You can't trade with the app, but you can track a lot of information. A lot of news gets put on that app, and I know I was utilizing that for a lot of information because news does drive stocks, and most of the time it'll drive it up or down depending on the type of news it puts out. When with pharmaceuticals, and again, when I name these different stocks, they're not for you to be like, oh, well, Tony said that stock, let me go ahead and put my money in that stock. It's not for that. It's just to give you an idea of some of the stuff that I've done in the past or some of the stuff I've been watching. So a stock like Moderna, which is a pharmaceutical stock, and they're one of the ones with Pfizer that actually have a supposed cure for the coronavirus or a vaccine. With Moderna, when they put out their information saying they were above 90%, their vaccine was 90%, I think it was like 96% effective. That stock rose because of that information. Like, that was good information for it. Another good thing about it was the market cap for it isn't as high as Pfizer or Johnson & Johnson, so it allowed it to run up more. And in the case of Moderna at the time, I believe it was at $60 a share, and now it's at $180 a share. So that was a great buying opportunity for some individuals. Oh, let's see here. Come on now, I know y'all got some questions. All right, so let's go back to the stocks itself. So when you're looking at this, it just looks like it's going up. All right. Now, for people who are bullish on the market or people who are day trading, swing trading, if you're just an investor, this is great for you, right? You're just like, hey, I put my money in Tesla and it rode up all the way here. Great. And you just sit back and let that money make money for you. So, but for swing traders and day traders, the way the market moves is important. And the reason why is because if I'm a day trader, I can make money on this move right here. So let me go in some more. It's on an uptrend. So I could buy stocks in that time frame, or I can buy options believing that the stock is going to go up. So I can make money, right? And then I could, oh, it looks like it's on a downtrend, I could get out. Or I could stay in it or whatever. And then I get to this point and I can say, okay, it looks like it's consolidating. So when a stock is riding, like it's going up and down in a small wave, but it's going sideways, that is consolidating. Now that's a small consolidation in a short amount of time. That consolidation, I believe, was only like a week long, but it's still consolidating. And in some cases, consolidating will cause it to go up, or consolidation will cause it to go down, depending on the popularity of the stock. For Tesla, of course, that consolidation, of course, in most cases caused it to go up. All right. So, but what I could do is I could, as a day trader, once it consolidates, I know it's going up, I could buy more stocks or more options. And then when it goes up, I can make more money. And then once I see it on a downtrend, I could get out. Or I can put in a put option, which is basically saying that I believe the stock is going to go down. And it allows me to make money off of the stock going down. And I can make more money that way. And it can consolidate some more, and I think it can go up, and I can sell those contracts, and I can buy it on another uptrend. And I can continuously make money off of Tesla with it going up and down continuously. So I can put in a put option here and watch it ride itself down. And most people right here, when they see it going back up again, they think they'll probably get out here because they think it might ride back up. And then there's some that are strong enough to ride it all the way back down. Now, that brings me to a key point when it comes to stocks. The stock market is psychological. You have to be mentally prepared for wins and losses. You are going to see days where you go red. There's going to be some days where it's green. You can't be just happy on the green days. You got to be happy on the red days too, because the red days are buying opportunities. The red days are humbling you and showing you that you are not what you think you are in the stock market. Case in point, I just made a whole bunch of money this week on the stock market, and I just lost a whole bunch of money in the stock market as well. So the psychology part of that is huge. So what I will show you guys is a book. It's an audio book. It's long, but it's a great book. And this is something that you should, I listened to it twice. And that book right there that I'm about to show you was extremely helpful when it came to learning the psychological part of it. I will say this though, when it comes to the stock market is based off of trends and fundamentals, and that's still has an importance to it. But right now with Wall Street bets and other stuff, and a lot of people home for the pandemic and interested in the stock market, it has caused the stock market to be a little volatile and to not trend in the way that it normally does. So it adds some excitement to it, but it also is a little fearful. So let me go ahead and I'm gonna share this in the chat. Hopefully y'all can see this. All right, there it goes. Trading for a living, right? This right here is a great book. And there's millions of books out there. And I'm pretty sure there's people in the chat who've read books that will recommend books for you. If you have some books that you can recommend to individuals, please do. This is a family affair. We're trying to help each other out. But that is a great book. All right, Jamie, let's see. She just recently bought some stocks, one share each of like 15 stocks. How do you know if stocks will be good later, if at all? Okay, so the question, basically, how do you know if a stock's going to be good? It's something we talked about a little earlier. So I will tell you, even though you bought one share of each stock, I would kind of bring me personally, this is my opinion. There's people who will disagree, but it's hard to make money when you're stretched out so thin with stocks. I would bring my number of stocks down. Me personally, again, somebody might tell you something different. And I might, especially if you're being cheap and you want to see your money go up, but you want to see more of an increase, I would bring my stocks down to about 5 stocks. The reason why I tell you that, it is hard to track 15 stocks, and especially hard to track 15 stocks daily. If you just want to put money in those stocks and just sit there, they'll make money. And I don't know how much you're investing in each stock, what the share price is and what the potential is on it. But one thing I'll say is this. What is the future of that industry? Is it an industry that's going to survive? So like the oil companies, yes, they've made a lot of money, and there's time periods where they dip and you can make more money off of them. But what is the potential for oil in America for the future? You got to ask yourself that question, and then you have to do your research on that. Now, clean energy, there's a future for clean energy, solar panel, EV cars, stuff like that. So as long as less than like $10 each. So you're pretty much doing penny stocks in some cases, depending on, but there's some stocks that are cheap, like Ford and some other ones that are cheap right now that have high market caps. But a lot of penny stocks are that. Who's the CEO? Does the company, when you go into and you look at them on Market Watch or other stocks, let me go back, the profile, do they change over a lot when it comes to their leadership? You know, do they have one head, or a lot of people, do they make stupid decisions? How are they doing? How did they handle the pandemic? Did they have cash on hand to help survive during the pandemic? Did they lay off a lot of workers? They need bailouts. Like, how do they manage their money? How are their earning calls look? They might start off losing money in the beginning, which isn't necessarily bad depending on how much money they're losing, but they might show the point where they no longer have debt. Now they're starting to make a profit. They're on an uptrend. Those are stocks that you want to, invest in. Tesla itself, I can never recommend Tesla to somebody, because it's popular, people love Teslas, but Tesla should not be where it's at right now. And the reason why I say that is Tesla's market cap, as I talked about earlier, was almost 800 billion. when you go look at other companies like Ford's market cap, and I think it just went up, so I could be wrong, but I think Ford's market cap was actually it should have popped up. I want to say it was 44 billion, and GM was at like 70 something billion. Okay, so they're at 45 billion. So they went up a little bit because they did go on an uptrend. Why is Tesla a newer company, an EV company that only makes EVs? And for those who have Teslas or talk to people who have Teslas or watch YouTube videos about Teslas, why is it at 800 billion when Ford, who's been around forever, is the staple of America? Like somebody in your neighborhood has an F-150. Like, why is it only at 45 billion? And a lot of that is how many shares they have out there, how big the company is, plants, all that stuff, how much money comes in and out, stuff like that. But why did Tesla shoot up so much? And Tesla, people complain about the panel gaps, issues with the screen. You're driving down the road, you want to use your autopilot, but the front trunk is showing that it's open even though it's closed because the sensors messed up, and just some quality control issues. Even though it's an EV and it's clean energy and people love the look, trend, stuff like that, and the simplicity of it, but the quality of the vehicle compared to Ford and GM and Chrysler might not be the same. So why is it that high? Well, another thing about Tesla is Tesla's not just an automotive company, they're a tech company. So they develop technology as well as solar panels and other stuff. So to know what stocks to invest in are going to be based off of you as an investor. Like you've known how long? When the Apple iPhone 3G came out, you knew this was a great product. You know this was leaps and bounds above everybody else, and that it would last for a while. So investing in Apple at the time was Steve Jobs was in charge. Like, okay, I like Steve Jobs. I like what Apple's doing. I like what they're doing. They're making money, and they have a product out there that people love. People are standing in line every September to get the new iPhone. So you know that's a good company to invest in. So you buy a couple shares of Apple. And there's other companies like that. Say there's a pharmaceutical company that's developing, and there's one right now that's out there that's looks like they have the potential to develop a cure or at least a treatment for Alzheimer's disease. So you have to look at that. Okay, how's it looking in the FDA? Does it look promising? Does it look like it has the potential? Is there a lot of investor sentiment feeling like this could be the one that does what we say it's going to do? So you have to look at those things to determine which stocks are good or which stocks are bad. If they have a shady, INSY is a company I lost money on. And it was on an uptrend because it was supposed to be developing. It was in the opioid pandemic that was going on. They were supposed to be developing a cannabis type of cure for or treatment for opioids to help get people off of it. Come to find out, INSY was part of the opioid program. They were the ones that were leveraging doctors and giving them money and sending them on trips and stuff in order for them to give more opioids to their patients, which helped get people hooked on it, which made them more money. So when all that came out in the news, that stock started tanking. When people started getting fired and arrested and all that type of stuff, and eventually end up getting delisted from the NASDAQ and everything else, that was a bad company. So you have to do your research. You need to find out for your portfolio what companies match what you believe in as a person, what's popular as well, and what companies not just there just to be there to just show their face, but actually want to make change or provide some form of entertainment or happiness to people. So when you're looking at your portfolio, you should be looking at, am I invested in automotive? Am I invested in tech? Am I invested in the financial market, pharmaceuticals? Am I invested in gaming? Gaming is a big thing. Esports is huge. Online betting is huge. Like, you should be looking at what sites provide that, like DraftKings. Like, again, this is not a recommendation for you, but DraftKings, I do online betting with DraftKings. It's easy. It doesn't cost me a lot of money. The potential to make money is there. It's not legal in every state because every state doesn't allow online gambling yet. But once it becomes legal, that could be potential for it to go up, you know, or they could just say, no, we don't like it and we ban it. And the next thing you know, that stock drops. So things that you use day to day that you know, like those of you who have the robots, the vacuum robots, iRobot, you might think this is the greatest product ever. Look at it. Look at the trends. Look at it and be like, hey, I think they have potential of growing even more. Let me invest in iRobot. And I only bring up iRobot because that was something I was looking at before. So hopefully, Jamie, that answered your question. All right, so good question coming up. Dante, I use Robinhood as a trading app. There are a lot of other platforms, some free. Seems that no fee for trades. Got a lot of people on the app. Do you have a preferred trading platform? Great question, because this is something I want to talk about. So for me, I use 3 sites, and these are not a recommendation for you to use. I'm gonna give you the reason why I use them. I use Robinhood, I use Webull, and I use E-Trade. Each one has its own particular reason why I use it and why. So we will start with, for me, I shouldn't be, if I'm doing all this work here, I'm not paying nobody a commission. I'm not giving you money to place a trade for me when I did my due diligence to invest in this market. So I started off on Robinhood. The reason why Robinhood, I will tell you this. If I can find another application that does what Robinhood does, I will let Robinhood go. Because I was pissed off about the whole Wall Street Bets incident that happened and how they stopped stocks from being traded. Because one of the stocks that I had, they stopped. And I don't think that was the way to do things. You would allow people to sell their stock, but you wouldn't let people buy their stock. You should just stop that stock from being traded altogether. No buying, no selling, till you figure out what's going on. But to stop it from buying it, but you could sell it, that just helped out the hedge funds, because then they were able to get their shorts, cover their shorts, and still not lose out on as much money as they should have lost out on because of it. But the reason why I use Robinhood is this. Robinhood allows me to instantly deposit money. So if I say, hey, if I do my research and I see that there is a stock that pops up and I want to get in on it as soon as the market opens, I can deposit my money into Robinhood. It will show up within minutes, and I will be able to trade that stock within minutes. If I sell a stock and it shows me that that sale is complete, that money will be available to me within minutes, and I'm able to trade another stock within minutes with that money that I just sold. Not every application will allow you to do that. That is the only reason why I use Robinhood. Robinhood is good for trading, day trading, and for option trading, and it's okay for swing trading. If you are trying to just invest, then there's no point in using Robinhood. It is commission free. They do have an application. If you pay like an additional $5, you get more information. You get to learn the level 2s, which is something else. You get to do margins where you borrow money from them in order to do stocks, which I wouldn't do that. So that's what Robinhood's used for. So for Webull is a great app. The fundamentals, the way the app is set up is beautiful. Any information I need for the most part, I can get from Webull for more than a grade above basic information. Robinhood will give you basic information. Webull will give you much more than that. The issue with Webull is if I deposit money into Webull, it might take an hour or two for that money to pop up for me to trade. And if I'm trying to get in a trade like right then and there, I won't be able to with Webull. If I sell a stock, it might take a few hours before that money, even though the trade is confirmed that it's sold, it might take a few hours before I actually get that money to trade another stock. So if I'm trying to day trade and I'm trying to get in and out of trades, Webull's better than some apps, but it's not as good as Robinhood when it comes to that. So if you're a day trader, Robinhood is better. If you're a swing trader, Webull is good, and if you're a long-term investor, Webull is good for that as well because it's no commission for that. Now I use E-Trade. So E-Trade isn't one of the original companies like Fidelity, Ameritrade. Well, I ain't gonna say Ameritrade, but like some of those other ones that's been around for a while. E-Trade has been around for a while because I remember seeing the commercials for it a long time ago. But E-Trade charges. They say they don't charge commissions, but they kind of do charge commissions. I only use E-Trade for OTCs. OTCs are over-the-counter stocks. So those are stocks that are not traded on the New York Stock Exchange or the NASDAQ. So for Robinhood, those OTCs, you can't even see them. You can't track them. You can't see them. You can't buy them. You can't do anything with them. With Webull, you can see the OTCs, but you can't buy into an OTC. Now, E-Trade will let you buy into the OTC. The problem with E-Trade is this: when you put money into your account, it takes 3 days for the money to become available. Sometimes I don't have 3 days to wait for my money to become available. So sometimes I just have to suck that up. And then when you make a trade, it's even longer for the money to be available than Webull is. So the only reason why I use E-Trade, and I'm pretty sure from what I heard, Ameritrade is kind of the same way. I don't know about Fidelity. I haven't used Fidelity. Is the reason why I use those. So you have to do your research based off of what kind of trader, what kind of investor you want to be, a day trader, a swing trader, or a long-term investor, on which stock works better for you. Like I said, for me, I don't want to pay a commission. Webull does, or not Webull, but E-Trade does charge a commission of 5% fee. I think it is for the initial trade, but when you sell the trade, they don't take any money off of it. So that's another thing to look at. Are you willing to pay a commission for somebody when you do the work? I don't feel like I should have to. Now, if they were trading for me, then that's something different. But if they're trading for me, I just give them the money and I just sit back and let them do their thing. Then that's different. But if I'm doing all the work, I shouldn't be paying you jack. You can get your money based off your ads and other stuff. So hopefully that answered your question on that one. Let's see. I'll tell you, what are your thoughts about buying stocks during their IPO, initial public offering? All right, so that's another question. So IPO is basically when a stock goes public. So some of the stocks that went public recently, big names were like DoorDash, Airbnb, and others. I'll tell you right now, the one stock I'm waiting on to go public is Impossible Meats. But when it comes to IPOing, it's hard to tell. Like you wanna, when you're tracking, so this didn't work for me as well as I thought it was going to. And I'll give you not DoorDash, Airbnb for an example. I think Airbnb was supposed to open up at $40 a share when it IPO'd. Its initial public offering. That's what IPO stands for. And when it came out, it was $40 a share. Or it was supposed to be, but it was so popular, I think it actually started off at like $140 a share. So you have to decide, am I willing to go up that high for that stock? So as a family, we made the investment to do that. We went in on it, and it shot up real quick. So you're like, good. And some stocks do that. Beyond Meat, when Beyond Meat came out, I think Beyond Meat was $20 a share or $40 a share. And when it took off to $100, $200 a share. Whoever had Beyond Meat made some money. It came back down, and it kind of flattened out. Now it's on an uptrend again. But that was a great IPO. Now Airbnb went up. I think it went up to $150, $160 a share. And then it came down to like $130 a share. So in some cases that scares people. We got out. But then it went back up. 145, 150, 160. Came back down again to 145. Then it went back up again. And I think it's like 180 something. Or no, I think it's over $200 a share right now. So as for if you feel like the company itself has the potential to do great, I will tell you, if you look at a lot of companies, when they IPO'd, a lot of them went on a downtrend. A lot of the companies that are penny stocks started off $200 a share, $300 a share, and now they're penny stocks. and part of it's because they had too many shares out there, um, and they just flooded their market with shares, which made undervalued their shares, or they just didn't handle their financials correctly, or the extra money they got from going IPO, they didn't do anything with it like they should have. Like Beyond Meat did stuff with theirs. They helped further their research and development, provide more different options when it came to meatless foods. Invested in and came up with partnerships with different companies and stuff like that. So they did a good job with that. Airbnb, like for me, Airbnb, Uber, DoorDash, a lot of those are great convenience stocks. I don't know if they're necessity stocks. Airbnb a little more than the other ones because Airbnb, when you travel, hotels are expensive. So to stay in someone's house or for you to be able to rent out your house or rent out rooms is a great product. So we should have held on to Airbnb longer than what we did. And I guess that's one of the ones that'll kick you in the butt. So if you IPO, is it good? Initially, for some cases, I would say they usually shoot up from the ones that I've seen. Not saying that I've seen all IPOs happen, but a lot of them, they do shoot up initially. And some of them keep the uptrend going. Some of them go back down. Because when you open up, you don't know what your market value really is. You think you know what your market value is, but who are you to tell investors or tell me as a person what I value your company as? So, like I was talking to my brother yesterday, when it comes to iPhone doesn't innovate anymore. Like Android will come out with a phone with 5G on it or 4G on it years before Apple will. iPhone or Android phones have been coming out with a screen that's 120 hertz for the longest. Apple still doesn't have a phone with 120 hertz screen, a fast refresh rate. So they're not innovating, but who's to tell someone who has an Apple phone that you can't tell them nothing about my Android phone being better than their iPhone. They're going to tell you, no, it ain't. In any which way they can. Even though the facts are my phone innovates more than their phone does. You know, whatever I have on my phone, you'll get it 2 or 3 years down the line. But who am I to tell you that your phone isn't worth more than mine? You know, so you can try to understand that, but it's hard to understand when you're talking about millions of people invested in the market and what they think the settlement is for an IPO. So hopefully I answered that question. The next question, can you do presentation on cryptocurrency? We can talk cryptocurrency. I will say that I didn't get into crypto when I should have. For those of you who watched the movie Dope that came out years ago, they talked about cryptocurrency in that movie. They talked about Bitcoin. And I should have got in there when they was talking about it, but it was hard to trade cryptocurrency and Bitcoin at the time. So cryptocurrency basically is a digital currency. So when you think of assets like gold, silver, things like that, crypto would be just a digital form of that in form of coins. So they're not shares, and my brother will tell you, don't call them shares, they're coins. So you're basically buying a coin. These coins are data mined. There are people who have computers, who have eGPUs and GPUs who mine these coins like you would mine gold or silver. And based on how many coins is out there, how many people want to buy it, determines on how much that coin is worth. So Bitcoin is what, $40,000 equivalent to a coin. Just last year it was 20-something thousand. Before then, you know what, Bitcoin was $300 a coin. So that's right there is, like we talked about the IPO. How do you tell somebody what something is worth? And a lot of people will talk about, I don't know about crypto, it's digital, like who manages it? And that's part of the joy and excitement of it is the financial institutions don't run it. You know, your money in a bank, say you have $50 million in the bank, you can't just go to the bank and go take out that $50 million because they might not have the $50 million actually on hand. You know, some of that is digital. You know, you can look at your bank account. You can say you have 50 million. You can say it's sitting in the bank, but when you go to the bank to go pull it out, they can't do it because they leveraged your money to something else, whether it's stocks or something at mutual funds or something else. So in that case, it's kind of the same thing. You know, I don't have the physical coins on me, but digitally it's there. If I want to make a transaction, I can online, but can I go somewhere and get my 20 coins? No, you can't like do that, have them physically in hand. But when it comes to crypto is the new wave. Crypto is a different way, especially with the markets when in America, how we keep printing money for the stimulus and relief bills. That's devaluing the dollar bill, which is causing assets like gold, like precious metals, silver, copper, digital currency, crypto to go up because the value of a dollar is going down. So something else has to be like, hey, I need to think of different ways to invest. I need to think of commodities that I can actually keep on hand to trade or to sell. And so that's what makes crypto important. And you have plenty of different crypto. I mean, you have, and it's cryptocurrency because there's some people who say, oh, you know, I like Bitcoin. Or you'd be like, well, I like crypto. Like, well, no, crypto, you shouldn't worry about crypto. You should go with Bitcoin. Bitcoin is a form of crypto. A little inside joke. But there's a lot of them out there, and they're all priced differently. Bitcoin, of course, is a $40-something thousand a coin. Ethereum, I think I said it right this time. You have Ethereum, which is $1,000, almost $2,000 a coin. Ethereum Classic, which is like $11 a coin. You have Dogecoin, which was supposed to be a meme coin. It wasn't supposed to be a special coin, which I should have gotten a long time ago. But it's starting to make its way up because of the popularity of people. Like, again, who are you to say what something is worth? Like, Ford puts a price on their Mustang. Doesn't mean it costs them $50,000 to make that Mustang. It might cost them $10,000 or $15,000 to make the Mustang. But they feel like the value of it is that. And if you agree with that, you will purchase it for that price. If you don't, you will wait for it to come down. And then they have to look at how they sell their cars because people aren't buying it at $50,000. They're only buying it when it drops down to $40,000 or $30,000. So when it comes to coins, based on how much is out there and how much people are willing to pay for it, will help the price rise or fall depending on how things go. All right, so this was only supposed to be for an hour. So let me answer, see if y'all got any more questions. Okay, by the end of the year. Yeah, so with Bitcoin, with cryptocurrency, I mean, with a lot of things, like Tesla. Tesla is, this is the thing you run into. You run into people in the market who are well known, who have platforms, who put price targets on things. They can say Tesla, for instance, will be and we can go back to Tesla. Tesla will be $1,000 by summer a share, or $1,200 by summer per share. When I first got into it, there was an investor. I can't think of her name at this time, but she's one of the top investors in the market right now. She is extremely popular, and she said Tesla would reach $7,000 a share. I think Tesla is getting close to that price point that she put out there. What are we looking at now? 816 times 5. This is prior to the split. She said 7,000. It's at 4,000 right now. And when she said it was at $700 a share. So prior to the split. So she was thinking about something. She works for an ETF, or she's an owner of an ETF. An ETF is basically a company that trades. They basically hold stocks. They're an exchange traded fund. There's plenty of ETFs. There's ETFs for gold. There's ETFs that just trade stocks. You should look into ETFs. You should track ETFs. The ETF that I'm talking about that she runs is ARK ETF. And you should go onto the site and look and see what those ETFs are invested in, so you can kind of see where they're at, what they're looking at. Because ETFs are to make money. And a lot of them will do, hey, I want to make 10% off this stock, and then I want to move on to the next stock. Some of them think this is long-term hold, and they're going to hold on it. So you should see what ETFs are looking at and get an idea of what the market sentiment is for that stock, and if you should buy into that stock. So Jamie, if you're still on, that would help out as well to know if a stock is good or not. Because if an ETF is invested in it, and they're invested in it not as a short thing, thinking it's going to fall, but if they're invested in it as a potential, as a buy, or they have 1 million shares or something, maybe that's something you should be looking at as a stock to go up. All right, so let's see, how many people do we still have? We have 4. Any other questions? Any other questions at all? Again, I don't want to, I want to keep it around an hour because I didn't want to give you too much information because there's a lot of stuff out there, but I just want to give you some of the basics of the stock market. For those of you who were looking, when I was showing you Tesla's stock right here and you were seeing these are called candles. This is a candle. This is what a candle looks like, all right? On a green candle, it opened up at that, and these are based off of time periods. So if you're looking at a stock at a time period of every 2 hours, each candle is a 2-hour candle. So this is the movement that's happening within 2 hours. You can go down to an hour depending on the thing. Now these are hour candles. 30-minute candles. So each stock opened or closed at a certain point. So when I show you a candle, again, a stock for that hour, the beginning of that, so at 12 o'clock, a stock opened here, and at 1 o'clock, it closed here. During that hour, it went all the way up to this point, and it could have went all the way down to this point, but it closed at this point. Same thing for a red candle. It opened, but it closed below where it opened at. So that's what makes a candle red. What makes it green is it closed above where it opened at. Hey, no problem at all. Like I said earlier, for those of you who missed it, we're a family on here, whether I know you from high school or we're actually family or we work together or whatever. You know, we got to take care of each other. Before the market crashed, no one was talking about stocks. Nobody on my timeline was talking about stocks. Instagram, Snapchat, Facebook, nothing like that. I had to learn a lot of this stuff through trial and error, through losing money and doing a lot of research, and to the point where now I'm obsessed with the stock market. And a lot of people are trying to understand the stock market now after all the information that came out about Wall Street bets and stuff like that. But this basic information for you to know. Again, read that book, Trading for a Living. It's about the psychology. Psychology is the biggest thing. I can do trend analysis all day long on this. I can read all I want about this, and I can learn, hey, I should get in the stock at this point. I should get out based off of the way it's looking. You know, if I see the dip, I should do this. If I see a bull flag, if it's consolidating, it's probably going up. Like, I can do all that all day long. But for me to mentally get in the stock, to be like, I'm no longer a sheep, I'm a bull, and I actually put my money in, it's psychological. For me to be like, okay, I've made enough money on this stock, let me get out, psychological. FOMO, fear of missing out. You see a stock ripping, it's up 100%, it's going, GameStop, whatever, and you're like, what's the psychology, the mental part of it that tells you, you know what, I'm not getting in on it. There'll be another stock that'll run another day and I'll catch that one. But this one is just taking off and the bottom might fall out of it. I'm not going to take that risk. That's the psychological part of it. Or it could be, hey, I'm down to lose some money. Like they say, you know, if you want high reward, you need high risk. And sometimes you might want to take that risk. Hey, I'm going to put $5,000 in GameStop because it's going to run up. And you could have been the ones that got in at like $100 and rode it to $400. Or you could have been the one that got in at $400 thinking it was going to go to 8 or something, or 500, and then bottom fell out of it and you just lost thousands of $50,000, $60,000. So it all depends. But the psychology part of it, you can learn, again, you can learn these charts all day long. You can be on Market Watch. You can watch CNBC stocks. You can be on Finviz and picking all that. But if you don't have that mental part down to when to get in and out of a stock, and this is more for day traders and swing traders, you're gonna lose money. What you want to do, or even just seeing red, knowing that you should want your portfolio when you do your trades, you should want to be 80-20 at least, at the minimum. So 80% green, 20% red. I mean, you're winning way more than you're losing. And if you're winning way more than you're losing, the money will come. So for you to be like, well, I only made $100 off that stock, but I lost $200 on the other one, eventually it will catch up. And if you're 80-20, you're going to eventually make way more money than you're going to lose. Question about another bubble. So my girlfriend was telling me about this. They keep talking about the stock market going to crash. So since when my actual market crashed because of the pandemic, and everything started shooting up again back in the summertime, they've been talking about the market crashing. Like Tesla stock. Like they think it's like people have been talking about this as a bubble. Like there's no way Tesla stock's going to keep going up. Like it's going to eventually crash. It hasn't crashed yet. As long as there's money to be made in the stock market, as long as people are willing to invest, I don't see there. And you know the hedge funds and the banks and all them and those billionaires and are greedy. They're going to want to make more money. What's the easiest way of making more money? Stealing it from the little guy who doesn't know what he's doing in the market. So as long as they're still getting money off of them and causing people to hold the bag, why not try to make money? So that should keep the market going. Do I think there'll be a bubble and it'll pop eventually? I think there's a potential for it, but I think people are smarter this nowadays. I think there's more information out there, the availability to get information when it comes to the stock market. So those who want to learn and those who want to invest, the information is out there for them. So there's going to be less people who get in, lose money, and then get right back out. There's going to be people who's going to get in, lose money, and then try to figure out why they lost money so they can go back and make that money back. So I don't know. It's hard to predict what, the millions of people invested in the stock market. It's going to take people with large sums of money to be like, I'm pulling my money out, or it's not worth it anymore for it to pop. So I can't really answer that question. I'm not that seasoned enough to know. But they keep talking about it on there. They keep talking about CNBC and all these, big name people are doing it. But they also didn't think Wall Street bets would happen either. They didn't think a lot of people would pull their money together and cause them to lose billions of dollars. So I don't know if they have the true pulse of the market right now like they think they do. They do for a lot of stocks like Ford and Apple and all the regular ones. But when it comes to penny stocks, you barely see them talk about penny stocks on CNBC and stuff like that because they're too volatile. They can't speak for that. They can't predict those and what people are going to invest in. Just like they couldn't predict, what happened with GameStop and AMC. So, it's a good question. Everybody keeps asking it. I just don't know who has the answer for it. Any other questions before I shut this down? Again, I know it's a lot of information. We're going over just the basics for those who want to get in the stock market or just getting in the stock market that have some information or just want to know where to look to. I can provide you some more people to look at or watch based off of what I watch or what I look at. If you are someone who wants to learn trend analysis or learn how to look at the stock market itself, let's see if I can share his page. Hopefully it pops up here. I will say for me, this guy right here is probably the best person when it comes to he is the best one, and he talks about it for forex and stocks, but it's pretty much the same when it comes to tracking charts. He is the best one that I've seen so far when it comes to explaining a candle, explaining flags, explaining uptrends, downtrends, when you should get in, when you should get out, just analyzing the chart itself. He is the best that I've seen so far. For those of you who have a problem with people who have accents, he does have a strong accent, so you're gonna have to really pay attention when you listen to him speak. But he's a smart, extremely smart individual, and I would recommend him to anybody who is trying to track or learn how to track the market itself. I'm trying to think who else. I think that's enough information. That book itself is 2-3 hours, I believe it is. It's an audio book, so you can listen to it while you're driving, at work, or whatever. So listen to that. Watch him for that. Like I said, Finviz is great, especially for those who are doing, who are looking at doing penny stocks and want to learn the stock itself and trying to find stocks to pick from, because there's so many different things you could choose. The one thing about Finviz, unless you pay for it, it's not that up to date. It doesn't stay up to date for regular users. So this is something good to do on the weekend, like before the market opens on Monday, Sunday or Saturday, whatever day you choose to look at stocks for. You go in here and you track what stocks you potentially want to look at for the week, and you get all the information based off of everything that happened the previous week and months prior to that. This is great for that. Again, Market Watch, anything you want to know about a stock, any news that's coming out, information on the stock itself, who's in charge of the stock, the charts, historical information, analyst estimates, like what they expect to happen. That's extremely important, because if an analyst, a 5-star analyst, says a stock is going to go somewhere, it may go there, or at least it might go up or down based on their evaluation on that stock itself. So if they say, hey, I think Ford is going to be $15 by next month, you'll see Ford uptick because of that. And it might not get to 15, but it might get to 12, 13. So that's the information to pay attention to. All right, team. I appreciate everybody who stayed on, everybody who paid attention to this. Again, I keep saying I need to get off, so I'm going to get off. If you have any other questions, please hit me on Messenger. For those of you who have my number, call me, text me, whatever. Text before you call. How about we keep that? Text before you call. And then we can talk about it. We can get on a Zoom call. We can go through it. We can look at your charts and stuff. And I can give you some information. Again, I'm not an expert. I'm not a financial advisor. I just want to provide information to you guys because it wasn't provided to me. And I feel like it's very important to understand what's going on in the stock market before investing, because you want to make money, not lose money. Because if you lose money as soon as you get in, you might want to get right back out. And it's something you have to learn, something you have to become obsessed with. So thank you again for everybody who watched. And then to those of you who will be watching this later, because I know some of you were at work and stuff like that, please check it out. Let me know the next one I wanted to do, and I don't know when I'm going to do it, but I want to talk about options. And one of my old supervisors brought up a good point, talking about taxes and how the stock market is affected by taxes, or how you pay taxes from the money you make on the stock market, how that's affected if you have different other things like a 401k, mutual funds, Roth IRA and stuff like that. And that's still stuff I need to do research on. So once I get that information, I will gladly do another class if y'all are interested in on that. But the next one would be a little bit more dive and in depth with stocks and options when people are ready for that, because I know it's going to take some time to digest this information I provided today. So again, thank you all. Have a good one. Again, hit me up anytime and we could talk stocks, because I'm obsessed with it. So I can talk stocks all day long. All right, appreciate it, family. Talk to y'all later.